You've just spent days, hours, months reading books about candlestick formations and how to use them in the charts, and you're still scratching your head at how to use those candlestick formations on a live chart. Well, here we are going to show you the top 5 bullish candlestick formations that show potential reversal points and also show how traders like to use these patterns to recognize opportunities. So we're going to start right here and we're going to look at several different patterns. The thing to note when looking at a chart just like this, you may find these formations up at the top of a consolidation range. You might find it in the middle, working its way up or working its way down. The key point to note when using these candlestick formations is we are using them to help locate bullish reversal points, meaning we expect the market to decline, give us a price lower, and then we want to look for that reversal point when the market price starts increasing again. So when we're looking for bullish reversal opportunities, we do want to find them near the bottom of the chart, somewhere around a key support level or at the bottom of a trend similar to something like this. So we're going to start off now with a base understanding of looking for particular candlestick formations. Now, the first one we are going to start off with is going to be known as a morning star. So a morning star, when we look at a chart and break it down, is going to be signified with 3 candles. You're going to see a bearish candlestick starting off the sequence, and then you're going to see a doji candlestick right here in the middle. Let's color this one black. It might also be a spinning top formation. It's just some candlestick showing indecision with the market. So we're looking for a full-bodied bearish candlestick, an indecision candlestick, and then followed by a full-bodied bullish candlestick. Something similar to this right here. And we're going to color this green. And essentially what that does is tell the individual there's a lot of selling pressure with indecision and that the bulls are ready to start potentially rallying up and bringing the price higher. So once again, we can look at examples on this chart and find them all over the place. But what I want to do is locate low prices where the price is exhausted to see that potential reversal. So we're going to start dragging our mouse and looking left. And as you can see, we see a period of indecision followed by the market making lower lows and lower highs. So we do see that there is a trend that's going down. That's at the bottom. It's at a low price. So we see right here a sequence of 3 candles that meet the criteria. So the first candle is a bearish candlestick. The middle one is a spinning top, which is also an indecision candlestick. And then we have a full-bodied bullish candlestick right after. We also do have a counter trend line break and close above, which signifies that the bulls could be in power to bring the price up. If an individual chose to make an entry, one could do so by making an entry at the close of this candlestick, putting a stop loss somewhere below the most recent low. So let's go ahead and place our stop loss right there, somewhere below the low price here of that sequence. We're going to measure it out from the entry points, and we can see that that's 344 ticks. So now for our take profit, if we're going to do 1-to-1 risk to reward ratio, we just want to put our take profit 344 ticks above the potential entry price. Let's see what would have happened. If we scroll to the right, we can see that the market started coming up, and then after a couple days, it looks like it did hit our take profit, meaning this would have been a winning trade. The next candlestick formation we will be discussing is what is known as a piercing line. So a piercing line formation will look like this. We will see a full-bodied candlestick that shows bearish movement. It's going to look just like this. And then the next candle is basically going to open up and close above 50% of that previous candle. If we draw out the 50% line, as you can see, it came down. There might be some wicks associated with that second candle as well as the first, but the overall premise is this body wants to be somewhere opening around that close price of the previous candle, test it, and then also close above the 50% line on that candle. So let's take a look and see if we can spot an opportunity. And if we look, right there is an example at the bottom of a trend of a piercing line. Once again, any of these ones can be utilized. There's a period of consolidation, but this right here would have been representative of a piercing line formation. It was at the bottom of a trend, and we can see these opened up very similar to the previous close and closed above the 50% line of that candlestick movement. So if an individual chose to make an entry at the close of that candle, once it has been spotted, one could do so by placing their entry there and their stop loss somewhere below that low price of that candle. And then we'd measure out to get our risk, 95 ticks for this example. If we chose to do a 1-to-1 risk to reward ratio, we'd place our stop loss somewhere above the market, 95 ticks above, so this way we can have that 1-to-1 risk to reward ratio. How would that have worked out for us? Well, if we made the entry, it would have immediately came down and gone bearish, which would have given us some drawdown. But as you can see, it did recover, closed above that counter trend, and within a couple candles, hit our take profit, which would have given us a 95 tick victory. The next candlestick formation we will look at is what is called the 3 white soldiers. So on this chart, once again, we could just look left and spot it. We want to find a low price at the bottom of a trend or at a support level. And we want to find essentially 3 full-bodied bullish candles in a row. It'll look something similar to this right here. First candle, second candle, third candle. And once again, they could be various lengths from the open to the close. The point is we are looking for essentially 3 full-bodied candles in a row to signify bullish momentum. Once again, you can find them all over these charts. Right there's an example. But we want to locate these at periods of support or at the bottom of trends. This one could work right here as well, but let's try to find a better example of that. So let's go ahead and look left. So right here, we can see that overall, the market was bearish, big down movement. There was a period of consolidation, which means that the market was at a low price near support. And then we see a big breakout, big full-bodied candle, another full-bodied candle, and then a third one. So if an individual chose to do this opportunity, they could do so. Once it has been determined with that third candlestick, that would be your entry price. Your stop loss would go somewhere below the start of that formation. I like to do it at a low price. And if we measure it out, we can see this is 499 ticks. Meaning if we were going for an opportunity with 1-to-1 risk to reward, we would want to find an opportunity that is 499 ticks above the current market entry price. So that would end up right here. So once it has been spotted, market price was at a low price and showed the 3 white soldiers formation. Let's see how this would have worked out for us. If the market moved, it was showing some consolidation. A little bit of up movement, a little bit of down movements. So you would have been a little negative right here. Going up, going down, going up, going down. And as you see, it's still going up, still going up. It would have been still profitable. Did it hit it right there? It doesn't look like it did, so it might have taken a little bit longer. As you see, it did not hit there yet, but it did right here. So this one took a little bit to fulfill, but right there would have been a 499 tick opportunity using that one candlestick formation, using a 1-to-1 risk to reward ratio. The next candlestick formation we will be discussing is known as a Japanese Harami candlestick formation. This one is for a bullish breakout, meaning we are expecting to see a full-bodied bearish candlestick like this. And then the second candle will be encompassed in between the body of the previous candlestick. Something similar to this formation right here. Once again, there may be some wicks that go for that above and below. But we're going to see if we can find some examples of bullish Harami candlesticks. Now, Harami means pregnant in Japanese. And as you see that formation, that second body is encompassed within the first. And you might see them all over the charts, but keep in mind we are looking for those low prices. We are looking for those bullish reversal points. So my eyes are going to be fixated on the bottom portion of the charts. And what we're going to do is just spot an opportunity. And right here, I see one. If we see the market, it was rallying up at that uptrend, but then was pushing down, giving us a downtrend. Right within that region, we see a full-bodied bearish candlestick. And then right in the middle, we see a indecision candlestick that's encompassed within that full-bodied bearish candlestick. So that means there's a potential buying opportunity. If one were to use this Japanese bullish Harami candlestick formation as an entry point, one could do so by entering into the market right there. Once it has been determined, make that entry at the close of the candlestick. Place your stop loss somewhere below. Measure out your risk to reward. And as you see here, this is 176 ticks. So we'd want to measure 170 ticks above the market for a potential take profit. And let's see how this one would have worked out. If we start zooming over, the next candle hit, did not hit the stop. That would have been a 176 tick victory. The final candlestick formation we will be discussing is called the Tweezer Bottom. And how that looks is basically there are two candlesticks in a row. You're going to see a bearish candlestick, full-bodied. And then you're going to see a bullish candlestick, typically full-bodied. And when you see how they appear, they will be at the bottom of a support level or at the bottom of a trend. And the close price of the first candlestick and the open price of the second candlestick are relatively in the same range. So not very little movement, indicating that the market price may have hit the floor and indicating a potential bounce to a higher price. So let's try to spot one of these tweezer bottoms on the chart. Now the thing to note is you may see that formation somewhere in the middle of the range. You may see it at a high price. That's not the point of these tweezer bottoms. We're trying to spot these formations at the bottom of candlestick movements. We're trying to see them at the bottom of downtrends. We're trying to see them at support levels because we're looking for that potential bullish reversal. So let's go ahead and look. And we're going to try to spot one at low prices. And right here is a nice example of the market going down and giving us a low price. If we see on here from previous and we zoom out and see that location, we can see the market's making lower lows, lower highs, and we're at a support level at a low price. We can see that pretty much the open and the close are in relative spots with very small wicks. So if an individual chose to make an entry, one could do so at the close of that candlestick. Place your stop loss somewhere below. Measure out the risk to reward to your liking. So in this example, 45 ticks. And then as you can see, that open of the next candle, it pretty much shot right up, and within one candlestick of movement, it went to the desired target location. Now, the key to note with a lot of these formations, you may spot a lot of these formations all over the chart. You may see combinations of bullish and bearish candlestick formations. You might see a piercing line and then also see a morning star all in a relative short period. That may happen. But the key is when looking for these candlestick formations and spotting to make decisions, if we're looking to look for bullish reversals, we want to find them at low prices near support levels or at the bottom of those trends to help us look for that potential push up to a higher price point.